These are exciting times for India. We are speaking to you live on the eve of India's budget 2017. We just got the economic survey report released today by the government of India. India's GDP, pegged at 7%. And amongst all this, we bring to you a quick but detailed webinar on goods and service tax. This has been in the news around for quite a while now, and we thought it would be great to sit with you and discuss what are the key implications for this upcoming regulation in India. With me is Kapil Dua, the Group CFO and Executive Director of Financial Consulting with Sanam S4. I'm Abhinav Sood. I'm the Manager for Tax and Regulatory Consulting here. And we get to the details straight away. What exactly is GST first? I think many of us have been asking this question to us. This is a new law that has been proposed that completely changes the scope of indirect taxation in India. It is regarded by some as probably the biggest tax reform in the country since independence. What GST does is proposes to merge a lot of indirect taxation. As you all are well aware, there are multiple indirect tax laws in India for goods, services, imports, exports, so on and so forth. So GST proposes to merge most of these tax regulations together into one comprehensive law. You're all also aware that there are different types of taxations at the state and at the central level. So this law proposes to combine all together into one comprehensive law. The new government, the BJP-led government, is very, very ambitious on implementing this law with effect from July 1st, 2017. There was the initial date of April 1st, but that has been pushed back to July 1 now. And some of the key, we highlight here some of the key taxes that are proposed to be subsumed under goods and services tax law. Service taxes, excise duties on manufacturing, central sales tax. If you go to the state level, you have value-added tax, entertainment tax, luxury tax. All these taxes are proposed to be combined under GST. There's a small footnote there, of course, which says that few of the taxes like basic custom duties, which is applicable on imports, taxes on liquor and petroleum, which typically has a separate levy, electricity duty, so on and so forth would be outside the purview. But by and large, most of the indirect taxes that exist for the daily producer, consumer, or corporate in India would be subsumed under GST. Why has the government done this? There were a lot of issues with the current indirect tax system, and in a way, GST provides benefits which seek to eliminate all the teething issues and concerns that we had with existing indirect tax regimes. There were multiple laws, of course. There was a barrier to free trade because of multiple laws existing. There was lack of credits available between those laws, and separate rules and regulations had to be created to allow for multi credits amongst different regulations. Of course, there was a high cost of compliance because every law had its own set of compliances that were attached to it. What GST enables is to simplify and reduce compliance burdens to a large extent and integrate all these compliances with technology. So Kapil will, of course, in detail talk about what that technology entails. It's also proposed that you'll have uniform tax rates, which was a big problem in India in the past. There had been multiple tax rates for different laws, different jurisdictions, different products, which is all supposed to be combined into a defined tax slab now. And to, of course, reduce tax avoidance and generation of black money, which has, of course, been the biggest news of all. If you look at demonetization initiatives for the government, if you look at any other initiatives to curb black money, counterfeiting, tax avoidance, GST in a way aims to reduce all these issues for a large number of people in the country today, because it aims to bring all these people into the tax net, eliminate cascading impact, lower tax burdens on the consumer directly, so as to uh, uh, ensure that consumers or producers or corporates do not indulge in any kind of tax avoidance practices. Um, with that, I'm probably going to hand it over to Kapil to talk about in more detail about what GST provisions actually entail. Over to you, Kapil.
Thank you, Abhinav. Good morning, good afternoon, good evening, everyone. So, let me dive straight into the topic. So, what are the GST fundamentals? We have been hearing this for probably I'll explain more what was the roadmap, but we have been hearing this for more than 15, 16 years now. So let's discuss more about what are the fundamentals. First of all, it's a dual GST structure, which is similar to we have right now, which is central and state would have the power to levy it. We have similar current indirect tax structure where we have VAT, we have central sales tax, and we have interstate taxes. So when the goods are moving from one part of the state to another state, there are interstate taxes which can be saved when you provide similar some kind of forms, which we call a C form. So it will be in the similar form of dual tax structure where both central and state would have the power. And that is exactly the reason it took us 15 years to agree to a rate, to the GST rate, to specific GST law between the state and the central legislation to come up with something like GST, as Abhinav initially said. It is currently going from, to be honest, going from the origin-based taxation, which is now to be substituted by the destination-based tax. It's more about fundamentals in terms of how do you provide the seamless transition from the current tax structure to the new transaction, which would be how do you encourage the new tax credit? How do you get into a one form of taxation which would be good for everyone, which provide more commercial parameters. So for example, currently we have taxation which is more law driven, which does not entail or agree to any of the practical issues. Whereas the government have talked about, let's go into more commercial parameter, where there are some practical parameters which we should understand in the new GST law, which is a very good initiative which is taken by the government. That what are the practical difficulties? It is more about the most important another fundamental which is there is on compliances. They have come up with something called GST network, in short from GSTN, which has created the whole infrastructure in terms of how do we create the infrastructure for easy access, easy levy, easy compliances of GST law, GST Act, and GST taxes. Because as of now, we have, as Abhinav said, we have number of taxes which are now combining into one tax. So imagine it'll be one structure, one infrastructure, which would need to address the needs of all those taxes, all those laws, all those compliances. So it is very important that the online portal, the information, the database, what government would levy these taxes with other assessment, filing of application would be under a very robust guidelines, and also fundamentally technology behind that infrastructure should also be very robust. So these, I would believe, these are the prime fundamentals into the GST law, which is just around the corner. So these were the few GST fundamentals. Let me dive straight into the very important topic of the whole GST law. What are the tax rates? What are the current tax rate and what are the proposed GST tax rate? As of now, as the law stands, we have the draft, we have the legislation, which is at the moment, which is a draft legislation, and we do have tax rate which are macro level based on the industries. So, for example, we have this slide which talks about the current tax rate on those macro level industries or goods and services, and what are the proposed tax rate under the new law. So currently under the existing law, for example, the price basket of the consumer, which is the essential goods, we have 0% tax, and the government have said it will be 0% tax, which is wheat, food grains, which are very essential items for the human being to live in. and there'll be no taxes. The second important industry sector will be consumer goods, which are more, I would say, it's more related to the goods like computers and soaps and processed food, which currently levy between 9 to 21%, and it would go up to two different rates, so either 12% or 18%. So most of the goods would fall either in 12 or in 18%. And currently it's a huge parameter from 9 to 21%. Similarly, consumption goods, which are more oil, spices, tea, coffee, which ranges from 1 to 9% currently, and it's going to go up to 5%. So there is a reduction. There is a reduction in the tax rate over there as well. Similarly, white goods, so for example, TV, the non-luxury goods, the tax rate currently ranges from 29 to 31%, and the government has proposed 28% as a flat rate on these goods. Those luxury goods, which are like demarried goods, tobacco, somehow prohibited in some regions and some states as well. Currently, it is going above 31%. Tax rates start from 31%. And it is projected and proposed that it will be a basic tax rate of 28%, like on the other above white good items, but there'll be additional cess, which will be provided, depends upon a specific state or central levy. Tax rate in terms of how do you justify the current tax collection by a specific center. So it's, or even state. So it's important to understand, or probably to watch out for, that in the initial period, I would say probably a year or even up to 18 months, the initial period. So the central has to give enough to the state who have already agreed that they are happy to have GST, that their revenues should not be digressed from what they're earning right now, even though in return they have confirmed for 3 years. So, but I would feel personally it should not go more than 18 months or even 2 years maximum, where there could be additional tax cess on the consumer, where consumer has to pay additional taxes just because the state would like to earn more, probably just to compare with what they were earning. But in a couple of or few years' time, there is definitely reduction in those cess, which is currently termed as additional cess. So it will be there will be problems, or I would say large tax base in the short run, but in the long run it'll be a very good tax base. So it's important to understand these tax rates, which will further clarified on each and every good and services, primarily when we get the more draft. And most important in these tax rates is the tax on services. So currently we have 15% or even lower tax rate under service tax, because some of the exempt services, some of the services are exempt from because of export of those services out of India. And in the new GST proposed tax rate 18%. And we still don't know yet about, there will be same exemptions which they provide to the services like export of services from India, and some other exemptions or some services are just not falling under the category of service tax. So whether those exemptions would be carried forward under the new GST law, we don't know yet. But it'll be a month's time. We would have more knowledge about these taxes. So these were primarily the tax rate. I'll just touch base on what has been the GST roadmap for India till now, and where do we stand right now. As I said, it started in 2000 by the previous government. They spent 9 years. Then it went on. It actually took momentum last year in 2016 by the Modi government. They put all of their efforts and power behind this to get this passed by the parliament, and it got passed last year by the parliament. And currently now in 2017, where we're sitting, the last meeting of the GST Council have just postponed it to 1st of July. Earlier, we were talking about that it could roll out on 1st of April 2017. As of now, it has been postponed to 1st of July rollout. There will be next meeting of the GST Council where they have to agree to the regulations, the draft regulation which is right now. They will agree to those draft resolution next month, and then the next step would be more towards getting it passed by the state and the center legislation, and then take it to the next level to make it an act, which has to be rolled out from 1st of July. I know it looks like, it sounds like there is still a roadmap, there is still a way to go forward, but it should run, it should move fast from now onwards. The 18th February meeting is important, where we will see that the draft should be agreed. However, in my view, the government do have time till September, because the current legislation as it passed, they have to get it into the action by September. If they don't get this into the action, like a rollout of the new GST law, the existing law needs to be ratified again, because as of now, it is applicable only up to 30th September, the current law. And from 1st of October, the new law, the current law, which is VAT and service tax, would not be applicable. So I do see as a deadline. I mean, I'm very hopeful that it should be there from 1st of July. However, I think if not 1st of July, definitely from 1st of October, it should be there. So that's a roadmap which I think we should definitely watch out and think about it. That how do we plan as businesses, companies who have businesses in India, foreign institution, higher education, that how do we plan our activities, how do we plan our services which we are either providing in India or we are receiving from India. What does it make? So that definitely takes me to the next point here, which is how do we make ourselves ready for GST? What do we need to do? So to be honest, we just need to figure out two main points: that what is the impact of GST on our profitability, and what is the impact of GST on specifically on our operation. So from profitability perspective, what is the impact of the extra cost in terms of the new or higher tax rate, and what is the impact of the increased credits which we will get. So now you can adjust the tax which you paid on your manufacturing with the tax which you would be paying if you're providing services. So manufacturing tax could be adjusted against the service tax. Similarly, the sales tax could be adjusted against the service tax, and so on. So there will be increased credit, and there will not be, or will be very less loss of tax which has been paid to the government. So one tax could be adjusted to the other tax, which are totally two different taxes under the indirect tax regime. So that's important to understand what would be the impact. From operation perspective, it is also important that you need to be ready from your accounting, from your operation, from your training of your employees, that they need to understand GST, from your accounting and other software like software systems. So for example, whatever the software system you use right now, whether it's an enterprise software system or integrated software system, including your inventory, including your accounting data, have to be a common platform where GST should be easy to plug in. So you need to work right now to talk to your software and technology service provider to include GST as one of the important add-on which will be in your software. So there will be impact on your cash flow. Impact on cash flow, probably, as I said in few previous slide, on your initial period, like from 6 months, year, or 18 months. That needs to be understand. Your service proposals, for example, if you are in the business of providing services, if you have large or long-term contracts with your customers, you need to understand what would be the impact. Because if you have agreed some tax today, say it's service tax at 15%, and you have clearly mentioned in your agreement or service proposal to your client that we will charge you 15%, I would suggest you change the language there. You should say we will charge you applicable indirect taxes, which could be 18%, which could be higher or even less. So those minor things, but it's very practical to do it and be ready for it for any future such transaction. And of course, there will be changes in your tax structures, which are very important. So what I feel, we do need to be, or you need to be ready for the GST, which will be probably 4 months away, 5 months away. And you just need to understand from your tax advisors, from your team, from other learned people who are working with you in India, that how would this specific tax, this GST, would affect your business in India. and how would you and when you should start? In my view, you should start right, even though it's draft legislation, even though we have broad numbers as of now in terms of tax together right now in terms of getting your business ready for the GST.
So, thanks, Kapil. We have a couple of questions coming in, and they're mostly related to this latest slide that you have been sharing with us. There are a couple of questions on the education industry, so I'm just going to take them together. What, according to you, are the key impact for operations of higher ed universities in India?
Wow, it's interesting. I was thinking to anyway cover that. There could be so higher education as an industry in India have different objectives, and they are probably doing different work areas. They are doing different activities in India. So and it will be a different impact on your objectives on your business in India. Activities which you're doing in India. For example, you're a higher education university institution from overseas, and you have a contract, or you are about to enter into a contract with an institution, IITs of the world of India, or another Indian universities, or an Indian corporate. Your GST affect you, so you need to put the language in your contracts accordingly, that who will bear the GST, how will the credit would work. Or reverse credit would work under your GST. If you are an institution who is just receiving services from India, you do not have any entity in India, you don't have any of your own office, own entity, you just have service providers from India, then the new GST rate, which will increase from 15 to 18%, would affect you. So you need to increase your cost base, like your budgets for the next year. The money which you would be spending on India would increase from 15 to 18%. Some of the foreign education institutions, like I said, don't have any entity in India. They might be receiving services from India without service tax, because the services going out from India would qualify under the export of service rules. So as of now, there is no service tax, but we don't know under the new GST law whether those services would remain exempt or not. There could be a full hit of 18%, or there could be no service tax, like no GST, as there is no service tax currently. I'm hopeful that similarly, like we have currently export of service tax exemption, we would have similar exemptions under the new GST law for foreign education providers who are receiving services from India. Now, the third element would be that if you have entities in India, then of course your entities, whether liaison office, your own profit-making, non-profit entities who are operational in India, would need to understand the GST impact, like similar to any other businesses which are having entities. Like you need to get your software ready, you need to get your technology, you need to train your people, you need to similarly change your invoices, you have to get your GST registration, which had just started in the month of January this month, and you need to do all that. You need to get yourself ready for those activities.
Okay, great. The second question that has come in is specific to a particular product. So, will any exemptions be granted for certain products such as medical supplies?
It is difficult to say right now that there will be any exemption given to medical supplies, though we are very hopeful that specifically the goods they have been talked, which those drugs, and specifically those drugs which are important for human being, cancer drugs and other, would be out of GST. Some of the medical devices also would be out of GST. However, there is no full declared list of items which may or may not fall under GST. They have just given the macro level tax rate for goods and industries.
And also specific to the medical industry, for the benefit of our viewers, there has just been a recent development in terms of a new policy for medical equipments in India. It's in a draft stage right now. So I do believe that will also have an impact on whether specific medical supplies get exempt or not. Another question that has come in, which is some more of a broad-based question with regards to government tax levy, is that with the new proposed GST rates being a little lower than current rates, as you pointed out, how will this impact the government? Do they make up the difference on their own, or is it that the new structure will allow for better collection of taxes and make up for the difference?
It's the later. So it will be, first of all, it will be better collection. It'll be less burden on the government for compliances and management. This specific new act, new tax will increase it will broaden the taxpayer base. So, for example, currently there are a number of taxpayers who just don't pay taxes. I mean, India is one country where you have 7 people to 100 in terms of who are in terms of voting. So there are only 7 people paying taxes to comparison to 100 who are voting. So it's a very, very low tax broadened base in India right now, and this new tax will be activated for more taxpayer. So government will have a more broader people paying taxes because they can adjust one tax to the other, and they will be happy to pay those taxes. So absolutely, government don't want to be the loser by bringing this tax. At the same time, probably the first few years they might lose in terms of the overall tax burden, but in the long run they will also be the gainer, and consumer will also be the gainer.
And as you rightly pointed out in one of the previous slides, that in the short run, you may see additional levy of cesses by the government just to make up for the loss of revenue that they are facing. And there's also a proposal between state and central governments that the center will compensate the state for the initial few years, as you rightly mentioned a little while ago, for the loss in revenue for taxes from GST. Moving on. Another question that we have is that how much time and budget should we spare for a transition plan, if at all we need to undertake one for GST in India?
We are sitting in a period where we should just start thinking, start doing something. I would say at least 3-4 months. So as soon as by mid-February we hear back that yes, it has been passed, the draft has been passed under the GST Council meeting, then the next step is just to get it passed by the center and state. So probably after 18th February, we should all act fast, because it's only 3-4 months. If you have not started already, probably if you have a big business, large base in India, you should have already started working on your technology. You need to get in touch with your software service providers. You need to train your employees. You need to get in touch with your service providers in India, with your employees, that GST is coming. So for sure it will come, and I would say at least 3-4 months.
We have questions on separate industries, transportation and shipping, and a couple of industries that have been highlighted as what are the key impacts for them. We're just going to take that offline now due to the paucity, and we'll definitely get back to you with any specific guidelines on what is applicable for each specific industry or product. But of course, at this point in time, because it's just a model law that is in place, and we don't have sector-specific rates or product-specific rates announced, which would come under a tariff act, which would be passed separately by respective states and the central government. There is little information that we have on each sector, but of course, we will take up with you definitely offline and let you know what the key impact for your respective industries or products are. Moving on, I think we just want to quickly give you the key takeaways that would be applicable for you going forward, and it's basically just a summarized representation of what we've just discussed over the last half an hour or so. First, you need to watch out for when this act is enabled in India, when this is enacted. Obviously, we've mentioned before, couples also highlighted the fact that there's an aggressive target of July 1, which is now actually being pushed back from April 1. And there's a constitutional compulsion to implement GST by September. So do watch out on when this tax is actually enabled in India. What's the start date? What's the kickoff date? And then, of course, work backwards, as Kapil rightly pointed out, towards a transition plan to ensure that when the day comes, when the D-Day comes, you are ready with your systems and you're ready with your cash flow impact that is going to happen in the short run for you. And most importantly, the pricing plan, because of course that is the key for your stakeholders in India, that your pricing for products, services does not change in any way, or if it does, then how best you can communicate it to your key stakeholders. Of course, a couple also talked about transition, having a transition plan ready. That's something you need to highlight as and set aside a budget or some sort of a man-hour estimate that this is the time that is going to be spent on your GST transition plan. You need to watch out for rules. The law is in place, but in India, everything works through rules. So there's an income tax act, but there's an income tax rule. There was a excise act, but there's an excise duty rule. So we are expecting that as GST law also comes in, there would be separate rules and regulations that would be framed, which actually talk about the process aspect of it. How do your compliances work? How can you take credits, so on and so forth. So do watch out for the timelines for those rules. And there would specifically be transition plans, which we estimate to be incorporated in those rules themselves, some grandfathering provisions, some sort of a transition timeline. So it's very important for all taxpayers to be aware of that. Exemptions, of course, Kapil talked about exemptions for export of services or any sort of rebates or lesser duty rates that are being provided as part of a specific exemption notification. You need to watch out for those and how that impact your product, whether if you're in the transport or shipping industry, or if you're in the education services industry or the medical supplies. Are there any specific exemptions that are announced for you, just as how they are active currently under different tax laws? Of course, you need to be in direct consultation with your stakeholders, your partners, your consultants in India, because you will have concerns, you will have teething issues. So just keep them on speed dial and make sure that anything that comes up is properly addressed with them and solutions are found out in the initial 6 to 8 month phase. And of course, you need to take a massive exercise in educating and training your employees. So there will, of course, be some initiatives which will be taken by the government, but on your own and through your consultants and stakeholders in India, you would have to undertake some training exercises for your employees to be able to make them understand the law, to be able to make them understand what compliance requirements are, get them a hands-on experience on the GST network, so on and so forth. So it's a small slide, but it's big steps. You would need to sort of sit down and sit on the drawing board with your team in India or your consultants in India and jot down the key next steps for enabling GST as part of your global business plan. That being said, we are a little short of time now, and we're definitely going to reach out to you separately and talk about all the questions that you have. And as soon as the law evolves and as soon as the law passes with the government, we're going to reach out to you and guide with the next steps forward. Of course, as I mentioned earlier, we are sitting at the eve of the budget, which is due to be announced tomorrow morning India time. We will very soon be reaching out to you and doing a webinar on the budget. We are expecting that there will be major provisions for GST also, which would be enabled in the budget. So do keep an eye out on what the next steps are from tomorrow onwards, and we're going to be back with you soon.
Yeah, thank you so much. Absolutely big day tomorrow.
Big day tomorrow. And with that, I bid adieu to all our viewers. Thank you again for joining us. We will, of course, take your questions offline and address any concerns that you have with regard to GST or any other tax implications that you're facing in India. Thank you. Good night, good evening, and have a good week ahead.
Thank you. Thank you very much.